It's me, Pavitran here. I'm gonna discuss about weekly analysis of crude oil, how it's gonna help us in the coming week. What had happened in the past week? What had major incidents happened is that the great production cuts, which has initiated by OPEC, Saudi Arabia and its allies, and Russia and its allies. That's an informal OPEC group, and the American shale oil production. Three are the major producers of oil in the world. Because of the lack of demand, we have seen a drastic fall from some around $52 to till now $20 level. So what we should expect after seeing the production cut of 10 million barrels, which is accepted by Saudi Arabia and Russia. Mexico is not with the deal. They've asked Mexico to cut somewhere around 4 billion barrels, but instead Mexico choose they will cut the production by only 1 million barrels. So Mexico is not into the production cut. Instead, the US has agreed to compensate for the Mexico, which has agreed that 2.5 billion barrels will be made cut in the coming week or in a coming month, say. So they will mostly implement it by video conferencing on Sunday somewhere. They haven't let the exact time. So final dim will be coming final that will be coming somewhere around midnight of Sunday. That's coming from 2 to 3 hours, which is away. The deal will be finalized. Now, what we have to expect? Say the demand has been reduced 30% for global supply, but the deal is which is made in OPEC is 10% of the global supply or 15% of the global supply, the production cut. So what we can assume from is that even if the 10% or 15% production cut has been initiated, I don't think so market will bounce back to the previous levels. So once Corona has to settle and the consumer has to get the oil, America has to export oil, Saudi Arabia and Russia has to export oil to China, to India. There are many physical probabilities right now. Even if 40% of rate cut of the global supplies, that is where the market has higher chance to go to this previous levels. Not with this 10 million barrels, I don't think it is very sufficient. So that is the main reason why it had triggered the sell off. On Thursday the sell off triggered so violently. Saudi Arabia accepted for a production cut, and even Russia has came down from its position. So market initially went soaring high by accepting this, but after an instance that it fell from the higher level. The main reason it sold off from higher level is that 10 million barrels per day is not enough. 10% production cut is not going to stabilize the market because the supply concern is more than 30%. For bringing down or to balancing that, we need at least 20 million barrels or 30 million barrels to compensate that supply and demand levels. So supply to demand ratio, even if the 10 million barrels cut, there is no much difference to the market. So what we can expect on today's open, if the deal has been done with Mexico, and if the final output number has been arrived, came to a conclusion, the deal has been signed, say 10 million barrel culls is available. We will be carrying forward from this month. If the deal has been made for 10 million barrels, I don't think market has any edge. If 15 millions or 20 million is on the table, then investors will be trying to take positions. What is the weekly candle is stating? As I said before, in the last week I said to you somewhere you can take entry at $25 or even $22 you can take entry by keeping stop loss below this green candle somewhere around 1950 or $19 level. Yeah, that is a good one to trade. Even now that is valid, you can trade, but with strict stop losses. Why I'm asking you to stick with the stop loss is that once this low of 30th March candle breaks, we can see a major fell off. If it breaks and if it closes in somewhere around day candle or 4 hour candle, even the sell off will continue in farther range. Because the main reason is that there is no demand in the oil market. No one is trying to buy oil right now because all are locked down in their homes. No industries is been running. There is no use of oil right now, so the demand has been reduced drastically. We can't expect now oil to go bullish. For oil to go bullish, it has to cross and sustain $40 mark, which is in a huge step for that. For first barrier it should break is the previous week high. See, this high has to be broken. It has to close above $29. $29 close is must. See, the high of this green candle, that is a March candle, was 30th March was 29.11. It has to close above that first in a day time frame or in 4 hour time frame first. After that, it has to sustain $30 level, which is now a huge task ahead. After it's sustaining, the next resistance region will be $34 level. 16th March that week, say for a month back, this will act as an strong resistance. These are the levels to watch out for. Now what we can expect, uh, what is my expectation is that I will be in a selling side. I am straightly into bearish mode. Why? Because not only seeing of this technical one which is taking the regular support at $20 level, not because of that, but main reason is fundamentally it's very strong. No, there has been not even a single thing that supports a market unless and until OPEC deal comes into play. Except that everything is looking very weak for me. So that is the main reason why I'm being so bearish on oil market. So stating that if you want to take entry, so if you want to take a positional entry, I will strongly advise you to wait for a candle to show some kind of reversal at the bottom, because it's nearly bottomed out. This low has been somewhere past 18 years ago, I think. I'm not very sure of that. In the news, I have read somewhere the low is around 18 years low. This is the first time market, blah blah blah. Many things are there. Right now, it's near bottom. So this too shall pass on. So you have to wait for some reversal candles to happen. After the reversal candle has formed, it should break the reversal candle for further going up. Breaking the candle high is more important, because as you can see, last week I said to you clearly, on 30th March candle has formed. I said wait for the opening. Candle will go below somewhere to 25 to 23. After that, if it has a good rally, it will go up. It will, if it breaks the 29.11 high, only we can able to see $34 level. See what had happened? It straightly opened up and fall off started. After that, there is no turning back. It tried to soar rear high based on the OPEC news, the production cut deal. It went nearly to $28 levels, but again, no chance of giving a market a hope. The $10 10 million barrels per day is not enough for the market. So sell off started and it came down heavily. Okay, as I am very clear about it, I'm very clear that I will be in a selling side. What are the major levels you can watch for? See, the major levels what you should be looking for right now is the $28 level. The $28 level is very much important. You should be looking at right now. So you can see it very clearly. It is taking quite some resistance over there. Let me change it to 1 hour time frame. You might find it a little bit easy for you. See here. This is the region. In this region, it's getting rejected. From there, it started to fall. See, whenever price tried to get near this region, it is going down. It tried to break up, but even then it fell off. Again, it tried to break that, it fell down, and now it's again went near to that and fell off. Okay, first resistance. What is the first resistance we should be looking for? $28 level. That is the first resistance you should be looking at. Strong close above that, you should be looking at $34 levels and $30 levels. After close of 28, you should be looking at 30. After closing of 30, you should be looking at 34. After 34, you should be looking for a 40. 40 is now right now acting as a psychological level. And below, what is the level you should be looking out? See, the below levels is very clearly stating that this is acting as a support for time being. $20, no, 24 to 23.50 is acting as an support for right now. I don't know whether it's going to hold, because at the opening at 3:30, investors, if they are not satisfied with the outcome of the OPEC deal, I don't think they will be holding this level. Buyers will be holding this $23.5 or $23. A big red candle is even possible, like the last week which I said, somewhere around from nearly $3 fall, or even greater than a $3 fall. Can you just assume if a $3 if $3 fall came from the right now opening, it will be somewhere around 20. So that is the next support, which is going to be a crucial one. If it breaks 23, 20 is on the cards. If it breaks 20, only God knows where it's going to stand. Yeah, because that's very much bearish. Can't able to lift the market only with hopes. You have to do some physical action. Market has to settle. Some positive news has to flood in, and moreover, the major oil producers must take a great production cuts in order to stabilize the market. So these are the levels to watch out for. In support region, somewhere around $23 levels, $20 levels, and 16 or $18 levels will act as a strong support in a weekly basis. On a weekly basis, on which acts as resistance, is somewhere around $28. After $28, $30, that is a psychological one. 34 will act as a resistance, and 40, that is also a psychological one. These are the levels you should be watching out. If you want to take trade on a weekly basis, I strongly advise you to take trade only break about 29.30, and below you can be shorting or the opening, but you should keep the stop loss somewhere around. First stop loss, it's better you keep the recent high which has been made on 3rd of April. That the recent high is more than enough. First high it should break was this the recent high, this one, somewhere around 20, yes, 28.30. That is the recent high it should break. After breaking that, it should break this recent high somewhere around $29 level. After breaking these two levels, $30 is on the cards. So right now this whole area is acting as a resistance. So coming into the support side, the $20 levels will act as a strong support, because in the previous 2 to 3 instances it had taken support there. See, look after this one, it came here and it took support. It went to created a huge rally, again it came down, and it even pushed market higher. And see, it's clearly taking a base here. It had formed a base and it pushed the market to even $28, $29 from this place. So you should be watching out for $20 level, which is psychologically acting as a strong support. If it breaks and closes, then a break below that 18 and 16 is on the cards. Okay, what RSA is suggesting right now to us? Okay, RSA is clearly suggesting us that on a weekly basis, let me check it out. Okay, on a weekly basis, RSI is oversold and it's right now in 60. What this means? It means a close above 40 is required for further going market up. If the first resistance will be acting at RSI is at 40, will act as a first resistance. Right now it's trading at 26, stating that it can even go to 10. No issues on that. But what is the first resistance will come into play? 40 will come into first resistance and 60 will be coming into a second resistance for us. Okay, what 30 minutes time frame RSI is conveying to us? Okay, what it is conveying? Yeah, clearly the trend. See from 8, it was bullish. It was bullish. When the trend has been changed on 9th, the trend has been changed. Just we will go on see what happened on 9th. See, on the big candle that was on Thursday, after the news related to OPEC deal which has been made, that is where the downfall started. After that, now if I have to plot, I can try to plot like this. So this clearly indicates that okay, it's now forming lower high, lower low. So what we have to do? It's very simple. We are in selling. This clearly says to us that we are in selling. Yeah, right now this channel will be following. What this channel represents is a clear downtrend. So based on Monday's opening, that 3:30, we can even confirm that market will be in either in sell off or huge rally have happened. So be careful. After the opening of 3:30 candle, a clear trend will resume. Either if it's gonna go up or if it's gonna go down, we don't know. The agreement between the OPEC and the final output still hasn't been released yet. If it released, then based on that, it will act accordingly. Okay, let's see what happens. Thank you.